Good morning, everyone. Welcome to the On Time, On Target Morning Briefing, where we invest with fighter pilot precision on a daily basis. Welcome back from a 3-day break. As you know, I was in California all last week. Finally back home with the full suite of screens that I'm used to here. So a lot to look at today. You know, we've been talking about Chinese stocks specifically. We've been talking about BIDU stock and watching it get absolutely crushed. We've talked about we're not holding BIDU. We got out of Luckin after it being my poster child for awesomeness for several months, right? Finally, completely out of Luckin Coffee. What are we holding? We're holding Alibaba through this. We're holding KWeb. That's my choice. You don't have to do that. When I say hold through a dip, I am taking a long-term approach. Do I think that Alibaba is going to go up today? No, it's probably going down. Do I think that KWeb is going up today because the pain is over? No, I do not. I think it's going down. So you could either sell those things and then turn around and buy them back later, or you can do like I do, and we're just going to hold them through it. I am not worried about China in the long run. I'm not worried about the policies that the Chinese government is putting in place. I'm actually learning a bit more about them as I read about them every day, right? Eventually you kind of pick up, what is the government getting at here? Well, their government's hopping in fairly aggressively. We don't necessarily like that in the U.S., but the making a quick change here. What's going on over there, they're trying to do what's best for their population, obviously through a different mechanism. But for example, like the Chinese education stocks, private tutoring is a big deal over there. The populace is spending a ton of money on it, and the government doesn't want them spending a ton of money on it. So basically, they're hopping in and changing some policies to where now families don't have to spend a lot of money on it. Obviously, if you are a Chinese tutoring firm like TAL, TAL is the ticker, then that's going to hit your stock pretty hard, to the tune of 70% in the past couple trading days, right? So pretty significant drop. But for some of these stocks, the bottom's in, and that's what we're going to talk about. So there's kind of 3 steps in a sell-off. There's the selling off. Do I get out? Yes or no? You got to make the call. Then just because the stock is bottom, that's the next step, is that doesn't mean it's going higher. So sometimes it's like, well, the stock's bottom, let's buy it. And it's like, well, I don't know, it could stay here for a year before it goes back higher. It needs a catalyst to go back higher, right? Sometimes hope is enough of a catalyst, but that's what we saw in Luckin Coffee. But just because you wait for something to bottom, like if you wanted to hop into Tal Education Group right now, yeah, you're probably not going to lose money, but that doesn't mean you're going to make money for maybe months, years, I don't know. We got to see when the tide turns, if you will. So now that's what we're talking about this morning. As far as our question, I do get the question of like for Alibaba specifically, just because the ADRs that we're invested in are going down, if you will, dropping in value, does that mean Alibaba's stock on the foreign exchanges is going down the same every day? And it's like, no, absolutely. If there's one thing I know for sure, is that it won't be going down the same, because they're different exchanges. So there's some different pricing going on there. And folks are like, well, can I just invest in the pure stock off the Chinese exchange? And if you're with Schwab, the answer is yes. If you're with TDA, the answer is no. Again, those two are going to merge here in a little bit being 24 months, so interesting definition a little bit. But you can. I can call into the brokerage and get specific shares listed on another exchange, and you can put those in your portfolio. And then same thing when you go to sell them, it's a little bit of a pain. And I think you have to pay a fee for doing so. I don't know, think an old time fee like $25 or $49 or something to do that. But that's why we have all these ADRs. So you don't have to hop in and pay fees like that. So that's the question of the day. We'll talk to that. The longs for the day trading stuff, a few longs out there. F5 Networks and Siri and GE all beat earnings. So you see those in the chat room. I'll repost those for the folks that just showed up. So get that back in the room there. Get it here in a second. And then for the short side, again, NRXP is a pharmaceutical firm. It's dropping like a rock with speculation that it may be being manipulated a little bit, pump and dump type stuff. And then we have a couple of Chinese names. You have BIDU or JD. You can't really short China across the board because of the sell-off that's already happened. And we had a several R move trade on Friday that was just beautiful. But there are some names that still have some more to fall yet, but the bottom is in on a few of them. I don't think the education group stocks can go down any further. All right, that's what we've got for our show today. So exciting stuff out there. If you're catching us on replay, make sure you subscribe, hit the notifications bell. If you want to join us live, it's $25 to come into the room. I have a Q&A window and a chat window, which you don't see, which folks can ask me questions real time, which I'll respond to. And with that, let's go ahead and get started. All right, here's our lineup card for today, July 27th. Let me update this real quick while we're talking. Make sure you have your Q&A window and your chat window set up correctly. And standard disclaimer applies. Make sure you do your own due diligence for acting upon anything you hear in this presentation. And you have to, if you want the full disclaimer information, it is available at ototnow.com. All right. Here's our objectives for the day. As always, grow our money, protect our money, and live off our money. Well, Chinese stocks, obviously, we're in a phase of, we're almost trying not to lose money. We know they're going down. It's now, what do we do with them, right? So in a situation like this, we've we've basically gone flat completely across the board. I had VIP Shop, I had Luckin, DD, I've had JD, Tencent, all of those names, except for now, the only one I'm keeping is Alibaba because it's just too big. So we'll take a look at that. I'm also keeping KWeb, which is the index fund, which actually had no exposure to DD. It didn't qualify yet, so that was kind of good news there. And some other, those are the only two that I'm keeping. And really, what am I excited about? There's going to be a time to load up on Alibaba and KWeb like nobody's business. And I'm just waiting for that opportunity to present itself. All right, tactical objectives. Again, we're looking at the Chinese stocks we just talked about, and the question of the day we'll get back to will be foreign exchange buying. Our flow for today, market review, headline review. Have a new screen for you. I haven't showed you for a while. Back to the Schwab Street Smart Edge. I'll show you what I'm looking at when we get to the day trading piece. You may find that interesting. Long-term investments we'll take a look at is the Tall Education Group, because I do think the bottom is in there. We'll also look at Alibaba and the House of Pain that we're in. Same with KWeb, and then BIDU is another one that I like out there. It's just you can't really buy into it yet. We'll get into the longs and shorts of the day. Again, those are posted in the room, and contingencies and academic resources are standard. All right, let's go over to TD Ameritrade ThinkPipes platform and take a look at where we are in the overall market. Yesterday was a nice big, it was an up day. It wasn't necessarily a huge up day, but again, the indices are bouncing off records. So people are like, is now a good time to invest? And it's like, well, you don't want to sound like the guy on CNBC that says, every day is the day to buy gold, but when you're at all-time highs, which you are a significant amount of the time in a market that goes up 10 to 12% every year over the history, over a 100-year history, you're going to be at all-time highs a lot. So the question now becomes, if you chunk money in here, then you have to be patient. So folks that are putting money in, as a professional money manager, just because you put 100K into the account doesn't mean I'm going to put 100K to work right now. I may sit on the cash for a while, and you can call me and ask me my plan. And my plan generally, when people call an asset, is I don't like the entry yet. I don't know if that's that satisfying of an answer, but they're like, well, what specifically are you waiting for? And I'm like, I don't know. It has to happen before I know that I like it, right? That sort of thing. So you have to be mature enough to be able to sit in cash and not just slam everything into the market when it's sitting at all-time highs. The time to shove all the chips in the middle and buy is at the end of a crash, but yet nobody likes to buy when the market is bleeding blood red day after day, like it did in March of 2020 and on into April a little bit. All right, so that's what we're looking at here. So that's why we keep everything in perspective, is where are we in the market? Here we are, we're up, 5 days in a row now after the 6 or 7 day or 5 day, whatever drop it was in the red. And we're back in all-time highs. So things are going higher. Again, the things that are going to derail this stock market are potentially the Delta variant of COVID, which I don't think is going to happen. I think it won't impede the businesses. I think we're done putting draconian measures on businesses, but it may affect us individually with some of our freedoms, but that's not affecting our money. So I think that, the market goes higher there. And then tax reform. Haven't heard much about it. It's coming. Just until then, enjoy the ride. All right, going into the 5-day, you can see the 5 days almost a line straight up. Again, setting up for a red day today, but we don't have that really big catalyst out there. And we have tech earnings. And you know what tech earnings are going to do? Crush them. So far, we're at 88% of companies out there this earnings season beating earnings. Yeah, that's a pretty good number, like record, like in the history since they've tracked that number. This will be the highest we've had. So that means things are going higher. So don't be surprised if we just chug higher through all of the tech earnings period. All right, here's the setup we'll have for our day trading today. Again, the full setup. We got F5 networks going long here. A little bit, we'll keep an eye on the volume. But it's a great earnings story you see here, and they're actually pretty attractively valued. NRXP is a short, as well as BIDU is a short over here on the right. Again, BIDU, NRXP being pharmaceutical, and BIDU being obviously the Chinese Google, if you will. That is a rough comparison, but kind of. All right, let's go to CNBC. Let's check the futures. Futures are pretty much flat across the board. Here they are. All right, they were red across the board earlier. It looks like they're all back red again there. The NASDAQ has been kind of flopping around there. So not too far in the red, but certainly selling off a little bit. And you know the big earnings are coming this week. All right, red across the board in Europe, Asia, mixed. Pretty big sell-off there in Hong Kong, 4.2%. Falls 8% in 2 days as China tech stocks continue to sell off there. It's funny, the Chinese exchange is only down half that much. Bonds hanging around that 1.24 for the 10-year, not a real big story there. Oil's been pretty steady, just above 70. Gold and silver have been pretty flat. Crypto certainly has bounced significantly, touched 40, I believe, after being below 30 for Bitcoin days ago, right? So there's a couple ways to play that. If you're interested, reach out to me. I may do something on it by the end of the week. All right, as far as our headlines for the day, you got Kathy Wood dumping Chinese tech stocks. So JD.com, I think that's a little bit late. You should be out by now. That's an opinion. Let's see. Tesla had earnings. Elon Musk said he's not going to the earnings calls anymore as the CEO, and everybody's gasping and saying what a bad CEO he is. Well, guess what? When's the last time Bezos went to an Amazon earnings call? Yeah, it's been decades, right? So get over yourselves. Sometimes the CEO doesn't need to show up to explain the numbers. That's what you pay a CFO for. So it's not that big of a deal. All right, there's Chinese stocks, more dumping, blah, blah, blah. Let's see. All right, nothing on there. So let's take a look at, let's look at the hardest hit first, these education groups. Again, TAL is kind of the poster child for this. So down, what is this, 5 months ago, up at $80 a share. It's down at $4. So this is instructive just from a perspective of when you get into that mindset of, oh, I had an $80 stock and now it's down to 60. It can't go any lower. Okay. Yeah, it can. Things can go a lot lower. Just because you're down 25% doesn't mean the bottom's not going to fall out. And that's what happened here. So what are we at? We're down from the high 96%. Yeah. Okay. 95% got me on the math there. But yeah, I mean, things can crater, right? So don't be too proud to sell if something's going the wrong way, right? Now, there's things you're going to hold. I've said Alibaba, I'm holding Alibaba. If Alibaba shows up at $4 a share, yeah, I will have lost a lot of money. I will have lost some clients at that point, but I will also be taking the remaining dollars that I have and buying Alibaba at $4 a share with everything I have, and then can retire in a year once it bounces, right? So, I mean, it's kind of, those are the opportunities that present themselves. So let's look at Alibaba since I'm talking about it. Here's where we are. So again, it was at 215 6 months ago. Now it's 192. So does it have further to fall? Yes, it's probably going to sell off today. Who knows? But at some point, it's too strong of a company to sell off much further. I mean, it's already down to forward PE of 16. I don't think that can crack 10 before people turn around and buy this. So, all right, the open is coming up. Let me switch to that real quick. I did not get to my new screen, so it will have to be tomorrow before I share that to you. Or maybe I'll show it to you right after the open. So, all right, here we are set up on a TD Ameritrade Think Pipes. Give me a second to get caged here for the open. Good morning, everyone. Welcome to the On Time On Target play of the day. We have 10 seconds to the market open on Tuesday. Let's see. We have 4 screens in front of us on the TD Ameritrade Think Pipes platform. You have the S&P 500 on the there's the opening bell. We have our one long, which is F5 Networks technology firm that crushed earnings. You can see that earnings number at the bottom. And then you have 2 shorts, NRXP, and we have BIDU. I like this NRXP best, but it's also outside of our window of that 5 to 10%. So I do want to see it back up here a little bit more than it just did before we turn around and take it short. BIDU here is a very strong company, so I don't like to short strong companies. I'd rather get into this NRXP, which people believe is being manipulated. So let's see, top high of the day here, 1642. So if we made it 45, 1630 to the downside is our setup. I'm not necessarily taking this. I'm just kind of looking at it for a second. I would like to see it go higher. There, that's better. 1650 covers the high of the day. 1635 will be our entry short. We got plenty of volume. I'm convinced that we're good to go here. So it's a 15-cent stop. 1635 is our entry, and stand by. That just happened fast. If you're in it, you're fine. We got to pad it a little bit. So get into it here. Well, crap. I said get into it, and then we busted out. So I'll take the loss there if you didn't get into that there. So we'll call that a busted trade, since I did say the words as I was trying to enter it. If you didn't get it and you still want to trade, this is a good entry. 1675, 1660. Call it 25 cents now. So call 1675 the top, 1650 is the interest, and keeps powering higher. All right, 17 now. So 1675 would be the entry to the downside if it holds 17 there and doesn't go above it. There you go, 1675. So if you didn't get the first trade that we busted out of instantly, you can take this second trade again. 1675 is your entry point. 17 is the high, covering the high of the day. If it busts out of that, clearly we're done. And there is the arrow to the downside. And then again, to get your 1, 2, and 3, your 1 R's at 1650, second R's at 1625, and you're out at 16, which it was what, 20 minutes ago. It was down at this range. So I like this entry if this 17 holds here. If it doesn't hold, we're done for the day on that. And there it goes through. So, all right, no love shorting NRXP today. 2 red X's there. All right, let's move on to BIDU, backed up significantly. It'll be interesting to see if all the Chinese names back up now. And in our F5 is going long. So let's get rid of these X's because I don't like looking at my own failure there. So let's look at BABA. See what's going on there. It's backing up since the open. Funny, the market's selling off and the Chinese names are backing up. This could be profit taking, but it's a pretty significant move up. Let's look at KWeb. Off 4% from selling off here, but being bought this morning. Let's look at TAL, TAL. TAL up 20% this morning. That's kind of crazy. After it dropped 50% the day prior and 50% last Friday, 20% yesterday. Now it's bouncing up 15%. So a lot of love's coming into the Chinese names. I don't think it's that safe yet. I'm not ready to start just buying into these things wholesale, but certainly it's nice to see the bottom. This should mark the bottom, at least being in TAL Education Group. And we'll take one last one, JD. Also up on the day from where it opened, a couple bucks per share. So getting some love across the board into the Chinese names. All right, let's look at some other longs out there that we had. GE, a little bit boring, but beat earnings. So it's up 3% on the day. Again, they've only barely started back their dividend. So they used to have a big dividend. Now they just have a very small one. So there's going to be room for dividend increases there across the board. And then Sirius SM, excuse me, Sirius SM, XM, can't say that. Beat earnings this morning. Again, small price point here. So up 5% though on some really good earnings out there. All right, that's what we've got for the shorts and longs. The screen I do want to show you, I'm going to share it out real quick since we have time, since we're not sitting in a trade anymore. So this is the screen. This is the Schwab Advisor Street Smart Edge screen that my intern takes a look through every morning, kind of find some highlights, things that meet our criteria, and then he built this screener, if you will. So the criteria for this screener is you have to be up, it looks like 4% or higher, and then 80,000 in volume. So, you know, my criteria is that 5 to 10. So let's build the screener, and 100,000 in volume. So let's build the screener just short of that in case there's a name that doesn't qualify yet, but it will by the open, right? So pretty smart move there. This is to the downside. Obviously, you have the shorts that meet the criteria there. And what it does is it weeds out all those big names when you see something's off, like, you know, 30%, but it didn't have the volume. Well, if it didn't have the volume, you can't get in there and trade it. So that's what we have. So the next step would be to see if we can screen out some of the ETFs, because we're not going to trade the ETFs. So if we get that, that would be a kind of the perfect world there. We also have it to the long side here. So you see some names. Let's see, I just saw there's Siri that we just looked at for Sirius XM. See, and there's GE there at the bottom. Looks like they were in it and just kind of fell out, but it's still showing up. So maybe there's some latency there, which is kind of good. It retains the name. Oh, they're up at 4% now. So yeah, so you have all the names we're kind of looking at. They're in the heart of our envelope, and plus the higher ones might be screened out as well. So pretty neat tool to be able to focus my efforts in the morning to try to find stuff for us to trade. Doesn't guarantee the trades are going to hit, but it does guarantee that we find the stuff that meets our criteria, which is important. All right, back to the TD Ameritrade Think Pipes. Let's zoom out and look at the longer term investment stuff. See what's on the move. Trade Desk up 3.5%. MongoDB, so tech names doing well. Clickstream, Raytheon beat earnings. So I've been a buyer of Raytheon for a long time, and I think it's still attractive here. DraftKings getting some love. Nvidia still bouncing after its split. Too expensive to buy into, in my opinion. Cyber obviously doing well. I've been buying that for pretty much everybody out there. So not a lot of names in the green for the market. Checking back on the market real quick. Okay, the market's been selling off, down about 0.5% there across the board. So that's why not too many names are in the green. All right, let's take a look. KWeb down 3.6%. That's not the end of the world. Let's see, C Limited is a tech firm. Alibaba down 2.7. So kind of NEO is another Chinese name that we're in. So you're seeing the sell-off, but it's certainly starting to settle a bit from the free fall that it's in. So, all right, getting rid of those and going back to close out our question of the day, which is how to buy stocks on a foreign exchange. Okay, so I found this 6 ways to invest in foreign stocks. So what do we do normally? You know about the risk, blah, blah, blah. ADRs is the way we normally do it. So if you're going to Robinhood or Schwab or whatever and making your purchase, you're buying an ADR. That's an American Depositary Receipt. It's actually depositary. It's listed here wrong. Receipt. And that is meaning, say a big bank out there, JP Morgan goes out and buys shares of actual Alibaba, brings them into their electronic vault, if you will, and then turns around and gives you the right to buy those shares that trade openly on our exchanges. So that's why the mismatch. They own the shares, which are trading on a foreign exchange. You own a receipt for that share, which is actually trading independently of how it's trading back home. So you need to have that kind of straight in your brain for understanding why there's not necessarily a one for one. Similar to volatility, we've seen the VIX moves this far, the VXX, which tracks the VIX, moves in the same directions, but never exactly at the same magnitude, right? It's always somewhere near because it's openly traded. So people can pay or sell, buy or sell for whatever they want. Global depository receipt, I've not heard of that term until this morning. I read about it a little bit, so I guess you could invest in stuff that way. I don't knowingly. I've had British stocks, right? BP, that sort of thing. I've had ADRs though. I haven't had a per se GDR unless I didn't know it. So here's what we're talking about: is the foreign direct investing now is going direct to another exchange. Can I buy? And the one that I did buy for a client who had to have We Want, which I can't remember what the company even does, but WWANT was the ticker, and that was only on the Hong Kong exchange, if I remember right. And he's like, I want the shares. So I went out, was able to buy the shares by talking to the trading desk with Schwab and get them added directly to the statement. So they do show up on the statement as everything else does. And it wasn't like in bold, or it didn't have, a separate column or anything for the fact that these weren't US based traded shares. But when you go to sell them, you got to make a phone call. So you see a headline and you want to sell, that sort of thing. You can't do that. You cannot log in and do it. You got to turn around and make a phone call to be able to sell these things, which again, I can get through pretty quick. I've always been answered instantly from the trade desk. I don't know if the retail investor can, if there's a big selling thing. I don't know. Never tried it from the retail side. There's global mutual funds, ETFs, and basically, multinational companies. It's just like owning Coca-Cola is exposure to the entire world because Coke is all over the world. But to answer the question for today, yes, if you want to buy a foreign exchange stock or something off the Canadian exchanges, I'm having a client working through that right now. Yes, you can if you go through Schwab. It's just you have to do a little bit of a maneuver, if you will. All right, so that's what we have for today. Markets in the red, both trades busted. Not the best start back on the home court here, but we'll be back at it tomorrow. So see you guys tomorrow morning.